Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra with me, Shel Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the record rally seems to have halted for a bit right now, 150 points lower in trade as far as the Nifty is concerned, 24,280 in front of you. The Nifty Bank is seeing almost a 400-point cut. That's a 0.7% of a loss. It's a broad-based sell-off that you're looking at within the markets, barring the FMCG and the pharma. So clearly the defensive SPAC holding up in a market that's now getting even weaker. The Nifty Auto Index, remember, this is the index that was rallying sharply. It's lost almost 2.2% in trade as of now. 1.7% decline for metals, PSU banks, 1.7% lower, IT. Even the broader markets, the small and the mid caps, have slipped almost 0.7% to even over 1% in trade. What are the big drags on the Nifty right now? It's M&M, that's now down 7% in trade today. Tata Steel, 2.5% lower. We also have Hindalco, that's down 2%. TCS, Hero Moto, Shriram Finance, State Bank of India, the top drags. What's still holding up? Asian Paints, about 3,000 odd levels can be seen on this one. SBI Life, HDFC Life, I think this is on account of the premiums that have been increased. Britannia, Divis Laboratories and Grasim, they are still holding up in the trade right now. Share.
Good afternoon, ladies and gentlemen, and the first serious dip after maybe 20 sessions, and there's that bit of nervousness in the market कि ये कैसे हो सकता है कि prices गिर रहे हैं, ऐसा तो हमने plan ही नहीं किया था. But we'll start with the normal chart of the Nifty, ladies and gentlemen, and I'd just like to point out that this 153-point drop that you see on the Nifty is on T-1, which is that tomorrow you have the weekly expiry of the index, and at the moment it's breached the 10 EMA, the 10-day exponential moving average. Just hold your breath for a while. The 21-day EMA is at 23,895. This is not to say that 23,895 is coming, but between now and 23,895 there is nothing. So just be a little careful on the long side. You just might see a long needed pause in prices. Remember, we started at 23,350 on 24th of June, and without fail there has been no run up, there has been no pause till 24,461. So 1100 points you've added, ladies and gentlemen, without even pausing for a breath. The last 4 days the market did give you sign of consolidating, and that's what is upon us at the moment. Let's see whether this goes into tomorrow or not, but parts of the market are completely defensive and money is moving into very strongly FMCG, in particular Dabur, Marico, ITC, Hindustan Unilever, Britannia, all of them showing decent upticks at this point of time. And of course, Sakshi, the paint companies are back. Yes. Asian Paints, Berger, Kansai, Akzo Nobel, all of them showing a fairly decent uptick. Something to be worried about? Not at all. I'd just like to point out Mahindra and Mahindra, which Sakshi has marked. There are two parallel stories running in the markets. Some companies cutting prices of their top selling products, and a parallel news flow coming in from the Association of Automobile Companies, which says that inventory levels are very high. I just like to point out Mahindra and Mahindra, they've clarified very clearly that they face no such problem, and there is robust demand for their top selling XUAV 700, I think that's what's called. XUV 700. Yes, 700. More importantly, you know why it's called 700, Sakshi?
No, it's very interesting. Must be 300. Okay. They have a lot of these cars.
So they don't say 700 or 700, they say 700 because O rhymes with Scorpio.
And
so Scorpio was this was launched maybe 15 years ago, and this was their top selling SUV at that point of time, even now. And I owe you a drive, I remember very clearly.
On your Mahindra Thar.
Yes, on my Mahindra Thar.
Yes.
And I will again tell you a very interesting story on why I bought Mahindra Thar. but that is going to be off the record. Just as
Okay.
the story of MRF is.
Okay. We'll try and eke out some sneak peeks of the story for all our viewers also in our conversations.
You know, there was a time when Sakshi and I used to do this lovely stories on the Chola Bhatura map of Delhi.
Yes.
And we used to try out different shops. There are 45 Chola Bhatura shops in Delhi which you must try, at least 10. And the reason why I got this Thar was to, you know, do that round in a Thar. So we'll discuss that offline. But very strong rally happening in PSU stocks. My apologies, FMCG stocks and rail counters. Sakshi,
Yeah.
there's absolutely no stopping our friend RVNL. 9% higher, 592. IRFC 2.5% higher, 200.5. Another company called Hemisphere Properties, which is a PSU play. This is the land asset of Tata Communications. At the moment 214, 6% higher. And then you have the usual suspects, PFC, REC. Sakshi.
Correct. Let's welcome our guest on the show. We have Mr. Chakri Lokpriya now joining in, Managing Partner at Red Strawberry LLP. Warm welcome to you, sir, and thank you so much for taking the time out. Just like how we began by saying that this seems to be first sign of a pause after that 5 week of a sharp rally that we've seen starting from the day, day after the Lok Sabha polls. Your own sense, sir, we're just about 8 sessions away from the budget and 1 day away from the hardcore earnings for the Q1 FY24 to begin. How are you looking at the market setup?
Good afternoon. Thanks for having me. And if you look at what has happened in the last, now when the earnings are going to be reported, we think that the broader market earnings index is going to grow faster, both the top line and the bottom line versus the Nifty. The Nifty will probably grow somewhere between 8 to 12% top line, and the bottom line probably about 12 to 15%, versus the broader market was likely to grow 15 to 18% top line and a higher number on the bottom line. And that, I think, trend is kind of so while Nifty has played some amount of catch-up valuation, catch-up with the broader market, what the Nifty is lacking is the earnings growth which the broader market has.
That's a fair point to make, Chakri. Good afternoon and a pleasure to have you with us. From now on, especially on IT, because TCS comes up with its earnings tomorrow, how do you see the market structured? We are seeing some decent money moving out, whether it's profit booking or short covering, pressing of shorts, only time will tell. But IT, where do you think lies value and where do you think lies pain?
IT, I think, when they report the quarter, the sector is likely to report a revenue fall, a sequential decline. This kind of indicate roughly maybe anywhere between -2 to +1, kind depending on the company and stock. And this kind of indicates that, the order book turning into revenue has not yet picked up as far as the IT sector is concerned. In addition to that, we are likely to see a margin contraction, so there is no benefit of that either. And third, with the rupee having been very volatile in this quarter, they're likely to going to face some more crosswinds of rupee cross exchanges that the companies have. Net, because of all this, I think, companies are likely to report a very muted quarter for the sector. And I think until the US clearly shows the direction of its interest rates, and therefore after that order flow picks up, IT as a sector will continue to remain very muted.
Okay. Chakri, let's discuss the auto space widely with you now. The momentum began with Maruti Suzuki. Of course, there was this UP government trigger on the waiver of the registration fees, and then came in a point that both M&M, Tata Motors began slashing the prices to celebrate their anniversaries on popular models, limited time period offers that are flowing in, but the stocks have reacted downwards, sharply lower in trade. For M&M especially, it's the top loser today. Your own sense of how are you looking at these large car makers within India?
Whether it's M&M or Tata Motors, both slightly different animals, because M&M is largely domestic in terms of its model. Tata Motors, on the other hand, on its very high end, it also has JLR. Now, if you look at but what's driving the M&M story is largely, their price cuts and their high waiting times. For a price, if you, anywhere from that 7 lakh or the 20 lakh XUV 700, those cars, if one has to wait 30, 40 weeks for a car, there are other alternatives that are becoming available. And for a customer, that wait it impacts quite a lot. So I think that is, but I think it's largely a noise factor because, M&M as a stock has done exceedingly well over the last 1 year or so, or even the last couple of years. So this is just a bout of profit taking in the stock. The long-term trend remains intact, and we will see, greater traction coming in from all the EVs and all that they're venturing into.
Chakri, it would be interesting for you to know that Uttar Pradesh up north, where at least our studio is, has given up on the registration fee for hybrids, and there is a possibility that other states might also follow suit. So this is also a dramatic shift that's happening within the roads, that you see a lot of EVs and hybrids now running apace with the petrol vehicles. Diesel, I assure you, is history, at least as far as NCR is concerned and as far as the passenger vehicles are concerned. Any hiccup that you see in terms of valuations of these top 2 or 3 companies, Tata Motors, Maruti, Mahindra and Mahindra in particular? This has been one of the best outperformers on the Nifty for the last 6 months.
Indeed, but M&M luckily is a sum of the parts story. So if you add the various bits of its businesses, I think still it looks okay. The headline number PE can look a bit high. On the other hand, if you look at hybrids, given that M&M does not have a strong answer in the hybrid space, and some of the other players which are not Indian players like Toyota, they do have a fairly strong presence in the hybrid space, and with good products, and can take away market share. Of course, the price points are a bit higher. Now, I think it's that's a bit of also the concern that is showing on the stock today. On the other hand, Tata Motors in its higher end has a very clear strategy of what Jaguar and Land Rover is doing in terms of launching its low linear lineup. Jaguar has been kind of missing in action. They have an EV lineup, but it's still far away. We're still waiting to see the details of that. So the valuations of Tata Motors are more akin to the international players. At least we should compare. We would compare to those versus M&M on the other hand. So I think net, if you take all this, the sum of parts story, I think it's still the valuations wise, they're looking all right.
Okay. Chakri, what about two-wheelers? We were hoping to see rural recovery, and now monsoons have hit and spread across the country. The upcoming budget, there is hope that PLI schemes for at least some spaces would be continued this time around again. How would you approach two-wheelers?
Two-wheelers, I think seasonally adjusted could kind of benefit because some amount of reprieve is likely to be seen post-budget, at least that's the expectation. And, the companies which are taking market share is Tata, is TVS Motors, Bajaj Auto. These companies are actually increasing their market share. They have a good product lineup both in the EV and non-EV space. And you can see a good amount of penetration even in tier 4, tier 5 cities as far as the EV two-wheelers is concerned. The uptake is fairly fast. So given that, I would think the earnings growth would remain intact for TVS Motors and Bajaj Motors.
Chakri, you've never shied away from naming stocks where you've increased your positions or made new ones, and money that you've taken away richly deserved because of the sharp rally and the good individual spotting of stocks that you did. In your portfolio, have there been any major shifts that have happened over the last 1 month or so when the rally has become deeper and stronger?
One of the spaces, again, looking at the budget, the one expectation has been that affordable housing as a space will see some amount of traction. So companies like HUDCO, PNB Housing, and REPCO, these are the kinds of companies that we have increased our weight. HUDCO is a company which is very uniquely positioned simply because it has all the benefits of being a PSU like. Its cost of funds are far lower than its competitors. If it does those bonds, tax-free bonds, that will further lower its cost of funds. And as and when interest rates start cutting down, we are close to the peak, mind you. So given all these benefits, and if there is any kind of a incentive for affordable housing, then HUDCO, PNB Housing, I think are well positioned.
Okay, and how about the entire PSU space that's abuzz with gains, defense and railway? Were you able to book some gains, or is this rally here to stay? What do you feel when you see a continuous 10%, 10%, 20% circuit within 5 defense PSUs on a regular basis?
You're right, Shale. The stocks are running up quite fast. Now, the one you've been in the market for a long time now, to see that, previously, if you rewind it back 3 years, 5 years, 10 years, 15 years, all that the railway stocks would do is just few days before the budget, there would be a buzz and it would die down. On the other hand, this time around, you're seeing actual orders for the railway companies and defense companies. Take a company name any company you want, Titagar Wagons, Jupiter Wagons, RVNL. The order book has doubled and tripled over the last 2 years. So something which has not happened previously, and therefore the multiples also are moving up for these stocks. Now, with an earnings growth of for 40% plus for many of these companies in the railway sector, the valuations also moved in that order. So I think as a long-term holder, because there's so much changing in terms of, it's not just buying railway wagons, it's railway wagons, railway lines, new stations, metros, high-end trains. It's the whole gamut. It's as if the stock sector has woken up.
Okay. The other thing is, of course, with the earnings coming in, Chakri, where exactly would you be keeping your keen focus? Which are the sectors that you believe can outperform in Q1 FY25 earnings, and where is it that the underperformance could lie?
I think NBFCs and some of these housing finance companies, as well as favorites over the last 2-3 years, REC and Power Finance, they are just going from strength to strength. It's quite remarkable how they've held out, and they've been delivering on their earnings growth, and their book growth. So their book is clean, their earnings are growing. So it's like one of those dream runs that these companies are seeing. So they will see very strong margins, as well as that is NIMs, as well as asset growth.
Absolutely. I hate to admit this publicly, and it pains me a lot, Chakri, but let me just say it out aloud. At 9:15 a.m., you need to shut the upper story here, not look at valuations, only look at price and momentum, and open the story at 3:30 p.m. and then probably relook at valuations for tomorrow. During the day, if you look at valuations, start to look at the market, you will definitely fall sick, not on the same day, then definitely in a week. That is how it is happening, and absolutely, Sakshi and I have been discussing REC and PFC from 225 rupee onwards. At that point of time, it was decently valued. You speak to anybody today, he will say abhi bhi decently valued hai. 600 rupees ho gaya. Now let us see where from now here. But we have a common joke on defense counters. When you come and visit us in Delhi, we will tell you that. But it's just it's this liquidity which is unrelenting, unabating, and it's lifted all boats to heights unimaginable.
You're absolutely right, Shale. These companies are growing, but also the good news for these companies is they're also growing. Their revenues, their order books, etc., are growing. But clearly, as you're absolutely right, their valuations, as well as the pace at which they're growing, is kind of, I think you have to pause and have a look before investors commit further money.
And look at this point, Chakri, while we are discussing liquidity, 40,000 crores in the month of June is the mutual fund inflow, 21,000 crores in SIPs, and two NFOs, about 11,000 crores, and it's just unrelenting. And we haven't added ultra HNI money, we haven't added retail money, which is non-MF, we haven't added EPFO, and we haven't added the foreign funds. So put together, this is 80,000 crore rupees on a monthly basis.
Indeed, the Indian mutual fund industry, if I rewind back to when I started in this business about 25 years ago, FII's money was clearly multiple times bigger than the Indian mutual fund. The retail investor has clearly become a very important player, and they also become a fairly smart player. They're good at booking profits. They're good at rotating from large to mid, etc. No, I think, but clearly a word of caution out there through your channel to the viewers out there is, sit by the sidelines a little bit, let the market play out before you commit further funds.
Okay. Chakri, since we're discussing earnings, we also have our colleague Asim now joining in to give us a preview of what can we expect from TCS earnings tomorrow. Asim, over to you. Give us a little detail, and then we'll come back to Chakri to really understand what should be investors' approach to these large cap IT firms right ahead of the earnings. Asim, yours.
Thanks, Sakshi. So the TCS will kickstart the earnings season with its Q1 results tomorrow. The domestic IT sector is on track for one of the weakest first quarters in at least 10 years. Motilal Oswal has said in its preview note. And in case of TCS, investors will track management's commentary on demand outlook, deal wins, and trends in AI and cloud computing. Brokerages have estimated the net profit in the range of rupees 11,771 crore to rupees 12,140 crore for the June quarter, which is up nearly 7% year-on-year against Q1 FY24 profit, which stood at 11,074 crore. Revenue is expected to rise 4 to 5% year-on-year between rupees 62,086 crore and rupees 62,491 crore. Deal wins are expected in the range of $10 to $12 billion range. Antique Stockbroking said it sees profit rising 7% year-on-year to rupees 11,853 crore on a 4.6% rise in sales at rupees 62,094 crore. Antique sees a 180 basis point hit on EBIT margins. Nuvama Institutional Securities says revenue growth is in constant currency terms at 14% quarter-on-quarter basis. It also sees revenue growth in dollar terms at 1.1% on a QOQ basis, driven by a recovery in BFSI and continued strength in manufacturing. The margin may fall nearly 140 basis point quarter-on-quarter. The brokerage firm sees deal wins streak to continue. Back to you, Sakshi.
Okay, thanks a lot, Asim, for that update. Let's go back to Chakri sir to really understand where exactly does he believe that within the IT space one should keep their eyes on. Are you also expecting a weak quarter this time around? And what will be a red flag for you if the commentaries, from the commentaries of the management?
From the commentaries of the management is clearly to watch for the conversion of order book into revenues. Any saying that there is a delay, customers are waiting and watching, will lead to a further derating of the multiples for the stock. And one of the things for all these companies, whether it's TCS, HCLT, financial services as a sector is such an important sector, and that sector can come back very fast whenever the interest rates in the US start coming down. Now, the way the Fed has been behaving, etc., it looks like it's going to take at least another quite a bit of time before we see action on that. So I think it's best to leave the sector on the sidelines with an underweight position.
Fair point. Apart from the IT space, what are the sectors that you're looking forward to outperforming their year-ago numbers as far as the second quarter is concerned, Chakri?
I think it will be the usual suspects that everybody is going into this quarter, which is CapEx, infra, defense, railways, all the and financial services companies are going to, I think, are likely to show fairly strong numbers. And on the other hand, consumer discretionary, except for if you take out companies like Voltus, etc., which have done well because of the summer, consumer discretionary, consumer staples, IT, chemicals are likely to show very weak numbers.
Fair point. And any stocks on the radar which you have taped on your laptop, which you are viewing, hoping to get into them at lower levels, even if you don't get them?
We've been looking at actually fertilizers. We've been adding some of the fertilizer names, Chambal Fertilizers, National Fertilizers, Rashtriya Chemical Fertilizers. All these companies have done nothing for years. Budget again. So that's a space to look forward to.
Fair point. Sakshi, we'll just do a detour into the markets. 24,294 on the Nifty and down about 138 points. Let's see whether the worst is behind as far as this intraday correction is concerned. यही होता है, बस 100-150 पॉइंट नीचे दिखा दिया and then they'll take it up. We still have about 31 minutes to go as far as today's close is concerned. Let's see where the close is. Do we close above 24,400 or do we close below that? That's the only moot question. Chakri, before we let you go, are you familiar with Delhi's cuisine?
Yes, of course, indeed. I love the cuisine whenever I'm there. Yeah.
Oh, wonderful. When are you here next?
I should be there shortly. I'll get in touch with you and look forward to the chole that you were talking about.
We were trying to surprise you by asking whether you've tasted chole bhature or not, and here's one that you pulled on us.
I really look forward to it. Yes, indeed.
Okay, so this, ladies and gentlemen, is a promise. When Mr. Lokpriya visits us in Delhi, we will take him to the Bulls and Bites show.
Yes.
And have a wonderful discussion on Chola Bhatura, where to invest money in. And that's a promise, Chakri, that you have to agree on online and you can't go back on it.
Absolutely.
Yes.
Thank you so much. We'll definitely do that.
Wonderful. On this tasty note, ladies and gentlemen, we let Mr. Chakri Lokpriya go. And all the best to you, Chakri. We hope to speak to you on the National Budget Day as well, 23rd of July. And till then, we've tightened our seat belts, whether it's a journey towards 21 EMA or whether it's a journey for 25,000, only time will tell.
Great. Thank you so much.
Thank you, Chakri. All right, let's look at the buzz in the markets. India Cements is now pulled up within the F&O space. So it's cement and it's also the paint space that's now pulling up in trade. And those are interesting spaces. One other space that's passing is the insurance space too. We'll continue to keep an eye out on that. Within the F&O space, of course, the gas stocks are holding up. So stocks like Mahanagar Gas are buzzing. Of course, some which Shell has pointed out, the power space, REC, PFC, both are doing very well at this point in time. 3% uptick for REC. You also have NHPC, NTPC also buzzing away. And then you have the pharma space now ticking higher. And you have the realty space that's recovered from the day's low. And the Nifty Next 50 that's recovered from the day's low as well. Let's look at the stocks within the Nifty Next 50 that are gaining ground. Railway space, which we've discussed. Godrej Consumer Products, SBI Cards. Pidilite, you have Colgate, Marico, Siemens also pulling up in trade. Avenue Supermarts, Shree Cement, Dabur. These are the stocks that are buzzing in trade, Shell.
Actually, let's try for 22,400. Two important parameters in the Nifty on an intraday basis have been crossed, and it will be very, very interesting to see what the close is. On an intraday basis, we are above 21 EMA on the 15-minute chart, and let's see what happens. Interesting days ahead. Intraday correction hona tha, jo ho gaya. Let's just see what the low is for the today. Today's trade, the low is 24,140, okay, and the high was 24,450. So it's a 300 point dip, 310, which is fair point. इससे ज़्यादा you want a correction. So,
Yes.
this is what it is, ladies and gentlemen. Let us look at the Nifty Bank also. Primarily the correction is because of the weekly expiry of the Nifty Bank, and we are down at the day's low almost 52 170 180, and the day's high for today was in the opening quotes itself 52 500. So, it is a 400 point dip that has come into Bank Nifty as well. Let us look at the pullers and draggers. I am sure it is primarily led by the major banks, and it is HDFC Bank that is pulling the index down by 10 points, M&M pulling it down by majorly 46 points. I am talking about the Nifty, and SBI as well 11 points. So, that is how the cookie is structured, and good moves coming on India Cements, which Sakshi has marked, but a blowout happening on Sun Pharma and Syngene 3% higher 745. In fact, I think the first stock that Mitesh marked in the pharma space today was Lupin.
Lupin, yes.
Above 1800, that is something to be looked at. Remember, the all time high for Lupin is 2200, and that was in January of 2015, Sakshi. For some vague reason I remember that. Another story for you to know.
Okay, we'll find that out more, but let's welcome our other guest. Now joining in is Amar Singh, Senior Vice President Research at Angel One. Warm welcome to you, Amar, and good to have you with us. Tell us, where are you keeping your attention within the markets? Even though the benchmarks are lower in trade, there is enough and more action within subsectors like we were discussing, the cement space, the paint space which has come back in action, autos which are buzzing. Apart from this, the power space, power financiers, the gas stocks, there's enough and more to talk about. Where are you really finding interesting moves that you would like to chase?
Yeah, I would say that we are definitely witnessing some very interesting movements in across the different sectors. PSU is one sector, I would say, which has really showing no signs of stopping, be it PFC or REC for that matter. Also, we are seeing some very good movement coming in the FMCG space, be it Marico, be it Dabur. We are seeing some very strong up move there, and some bullish momentum coming up there. And also amongst the life insurance companies, HDFC Life is one stock again looking very strong on the charts. It is taking out some crucial zone of resistance that's around 640, 650. Currently it's around 635. Sustaining over that level, it has the potential to rally towards the 700 mark. So these are some stocks and across sectors which are quite interesting. And also, as you rightly mentioned, we are seeing some good movement now happening in the paint space, because most of the stocks had witnessed a beating. You look at the leaders like Asian Paints. Again, today has been a good day, I would say, comparatively. It's up almost 3%, but it's still, there's a long way for the stock to go. So ideally, it needs to sustain above the psychological 3000, 3050 zone for any meaningful upside rally in the stock. So I would say that yes, across sectors we are seeing some sharp move up today, and also we've seen some very sharp pullback in the benchmark index, that is Nifty, from the lows of the day. So that was, I think, 24,140 or something. From there, it's up almost 180 points from the lows. So that tells me that yes, despite the correction, we've seen some pullback happening in the markets, and also the advanced decline. If you look at the ratio, declines are more in terms of advances. So that also speaks something about it. But effectively, if you ask me, the trend remains positive. But today's low is something which is going to be very important for Nifty, because the heavyweights like HDFC Bank, ICICI Bank, Reliance, these are going to play very important roles going forward.
I think, Sakshi, there are 21 stocks in the pharma index, and out of 21, at least 12, 13 are in showing very decent gains. And this was kicked out by the Mankind Pharma block deal. It started fairly strongly, 2.2% higher, 2150. This is a bounce that is coming from the 200-day moving average. Stocks within the pharma space that have hit record highs are Glenmark, 1380, 1.5% higher. Aurobindo Pharma 1340, 0.5% higher. Dr. Reddy's flat as flat can be 65.96. Mr. Singh, any favorites within the pharma space?
I would say if we look at the pharma per se, so this is one sector which has been buzzing off and doing quite well over the last, I would say, a few months. And if you look at in pharma, say amongst some of the stocks which can be looked at, I earlier talked about Aurobindo Pharma that's trading at the record highs. We are seeing some sort of up move in Divi's laboratories, but now some consolidation is being witnessed. If you look at Gland is now, we are seeing some sort of capping of the upside. So till the time it doesn't reach the 2100. Glenmark Pharma is again very strong. It has taken out a major high. So if you go back in time, the stock in 2015 had made a high of 1262. Currently it's around 1380. So that high was taken out as recent as 1st of July. So since there the stock has rallied. So this is again one stock which is quite strong on in the pharma space. And apart from that, I would say Lupin is another stock one can keep a close watch on because it's inching towards its all-time high. So all-time high was around 2130. But prior to that, it had made in 2016 a high of 1911. So currently it's around 1827. The stock is up significantly year till date by almost 38%. So these are certain stocks which can be looked at, like Lupin, as I talked about, Glenmark Pharma, some stocks from the pharma space which one can keep a close watch on.
Fair point. Anything you've mentioned Dabur and Marico as your picks within the FMCG space. Pharma we've discussed, Lupin and Glenmark. Anything in IT which catches your fancy? We are ahead of TCS's quarterly show tomorrow morning. How do you see TCS in particular, and where do you find value in IT?
So if you look at TCS, I would say TCS is witnessing some sort of profit booking from the highs which it had made recently. That was 4,047 on 4th of July. Currently it's around 3,900. So if you ask me, looking at the charts, till the time TCS doesn't take out the 4,000, 4,050, 4,100 zone of resistance, we could witness some consolidation. On the downside, crucial support for TCS comes around 3,750, 3,800 levels. So having said that, what I see in the IT space, particularly we are witnessing some sort of profit booking happening there. And be it Coforge, be it HCL Technologies, be it Infosys, be it L&T Technologies. So we are seeing some sort of profit booking happening there. Persistent continues to remain strong on the charts. So any pullback could be a buying opportunity there. Apart from that, Tech Mahindra is also one stock one can keep a close watch on. Sustaining above the current levels is something very important. So ideally, if it's able to sustain above the 1500 level, currently it's around 1462. 1500 level, then it could witness some very sharp up move, because if we go back in time, the stock not very far off in 2022, it was trading as high as 1800 level. So there's a lot of steam left, provided it sustains above the 1500 levels.
Fair point. Sakshi, I'd just like to mark Bombay Stock Exchange. I'll request the PCR to fire a longer term chart on the Bombay Stock Exchange for two reasons. Against the backdrop of a lot of noise that is coming on a ban on excessive trading in derivatives, here is a chart of the Bombay Stock Exchange. While it shows an uptick of 2.2x over the last 1 year, what has happened at the moment is that it's at 200-day moving average, and it's falling for the last 5-7 trading sessions. If you can, I'm just requesting the PCR to fire a smaller duration chart, and from I think a high of 3000, it's presently at yes, this is a better chart. So what you see today is 23,336. Let's hope it bounces from 200-day moving average. Otherwise, the weekly charts will get worsened against this rising drumbeat of derivative trades being curtailed, indices being asked to come off the weekly expiry and so on and so forth. Mr. Singh, how are you viewing this development which SEBI is doing in terms of trying to curb this excessives in derivatives trading? As a broker of consequence and one of the biggest beneficiaries of this very sharp momentum led growth in the market, Angel One is also at risk.
Yeah, actually, I wouldn't be able to comment much on the regulatory perspective, but I can definitely talk about the BSE stock, which you mentioned. Having said that, yeah, because volumes are there, and that could impact the stock as well. So we are seeing some selling pressure there in BSE as well. And as you rightly said, it's at very crucial and critical support zone. So today's low is something which is very crucial for BSE. If this low is taken out, then if you go back in time, so somewhere in January, the stock had made a low of 1980, and then it had made a low in March of 1970. So anywhere between 1950 and 2000 is going to act as a next level of support if today's low is taken out in BSE and the stock starts sustaining below today's low. So then there could be added pressure in the stock.
So the exchange is perhaps the best barometer that you can find about how the pain is coming into the system. The all-time high, as I have mentioned, is 3,300 on the Bombay Stock Exchange. This was hit somewhere in late April 2024. And in the same breath, I'd just like you to watch the CAMS chart, which is at a record high, up 6%. Now, CAMS is responsible for about 80% of the back end of all mutual funds. All SIPs, at least 80% of them go through CAMS. And this is at a record high. I think in the morning it was up 7%.
Yeah, sharply higher in trade. So of course, yesterday we did see that record number coming in for both SIPs as well as the equity mutual fund flows. That probably has led to this sharp rally, and we'll continue to look at what BSE is indicating, and that is an important indication that both Shell and Amar have pointed out. But let's look at some of the other pockets in the markets. Insurance space, Amar, for you, LIC, SBI Life, HDFC Life, ICICI Pru, the entire space seems to be a buzz. There is report that these shares are up on the back of a jump in their new business premium in Q1. Life insurers have reported an increase in the new business premium to the tune of about 29% on a year-on-year basis. And of course, there is low base effect, increased insurance coverage, and increase in single premium that has driven the premium for the first quarter. And of course, there is the other, premium hike that we have seen across the board. How are you looking at these 3 or 4 players, both PSU versus private, and where would you keep your focus?
Yeah, I would say definitely we are seeing positive momentum being built up in the life insurance space. I talked about HDFC Life, even ICICI Pru continues to remain strong and positive on the charts. If you look at the stock on a quarterly basis, it's up by almost 9 to 10%. And if we go back slightly, so in currently it's around 660 levels, but in September quarter of 2021, the stock traded as high as 720 plus. So the structure of the stock is very strong and positive. And what we're seeing is that over the last few trading sessions, specifically when there was a breakout, that was on significant volumes and delivery quantity. So the stock has a potential to rally. So what it needs to do is it needs to sustain above the 620, 630 zone, currently is around 660. So sustaining of that level, it has a potential to reach its all-time high. Talking about the PSU space, LIC is one stock which I've earlier also talked about. Once it breached a crucial zone of resistance, which was around somewhere around 700. Currently, it's almost up by 50% from those levels. If you ask me now, the stock is displaying some signs of fatigue and some sort of loss of momentum. So till the time the stock doesn't take out the 1070 levels, 1070, 1080 levels, which was a recent high also, I would say we could witness some sort of consolidation. But overall, The long-term trend, short-term trend remains positive. Intermediate-term trend, we are seeing some sort of consolidation. On the downside, the stock is strongly supported around the 950 zone. So 950 is a very strong support zone. On the upside, 1070, 1080 is a level to watch out for. Trading above that level, then the stock has the potential to rally towards its all-time high, which was 1175.
Fair point. 318, 12 minutes to go. Let's look at the top performers today despite the weakness that is there in the markets, and we'll request Mr. Singh to offer his views on them. Let's look at all-time highs on on the National Stock Exchange, names that we generally don't discuss. Okay, we discuss all of them. This is becoming a little difficult. Let's try the tested ones. BEL. Amarji, selling across the board in defense, but here is BEL, slightly strong today. We had a morning high of 340. Mild profit booking, nothing to be worried about. What are the medium term charts of BEL telling you? This is one of those slow but certain performers. Doesn't give you a 20% uptick on a regular basis, but 3-4% once or twice a week, इसमें अच्छा पैसा बनता है. What are the charts telling you?
So if you look at BEL, so BEL clearly it tells me that the trend remains strong for the stock on the upside. But what we are witnessing right now is that a lot of short covering is happening in this particular stock, because the stock, when it had rallied and made a high of 323 on 3rd of June, and then it had corrected all the way towards 230, and then again it had made a high of almost 320 on 19th June, and it has taken out. So these were levels where a lot of short positions were being built. So if we look at the derivatives data also, we are seeing short built up, and also what was the rally which has moved over the last 5-7%, that's more on the back of short covering. So the shorts are scrambling for cover. And having said that, if we look at the trend, I would say that this is one of the stock which is very strong on the long term, on the intermediate term trend. If you look at because the trend being up is one matter, but the trend strength is something which is even more important. So here, from an intermediate term perspective, from a long term perspective, the trend is exceptionally strong. Yes, we could witness some bouts of correction, and the stock has been a multi-bagger, because if we go back maybe 3-4 years back, the stock used to trade around 30. Currently it's around 330, so the stock is up by more than 10x. So this is one stock one can look at buying on dips. The levels to watch out for, I would say, somewhere around 280, 290, 280, 300 is the support zone for the stock.
Absolutely. Just to add 1 point on BEL, this is a post 1:1 bonus price that you are seeing at 333, and this is exactly the place where the bonus was announced. And from then on, the stock has doubled. For instance, it went post split to 150, and because the rally is so strong, it's back up where it began at. So this is something that you need to sort of keep in mind. Okay, when was the stock split announced? Okay, this is not visible on this chart, but I've been tracking it for a while. So Sakshi, 3 stocks refused to give up in this sell-off: RVNL, IRFC and IRCON. All 3 of them are showing smart gains. I believe RVNL will again reclaim its yesterday's high, which was I think 619. 1 second, let me just check on a daily basis. Yes, okay. The high was 619. At the moment it's at 617, and volume today is a phenomenal 200 million. Kitna crore hua? 20 crore. 20 crore share have been traded. Let's look at what the volume has clocked. Wow, 12,095 crores. Amarji, what are the charts of RVNL telling you?
So if you look at this stock, this is again, I would say, defying all laws of gravity. And the way the stock has taken off this week itself, the stock is up by 25%. If you look at over the last 2 years, the stock is up by almost 20x, and not showing any signs of I would say, decline in momentum. So the stock which I talked earlier about, and they have a similar pattern. So in terms of the trend is very strong. Momentum is building up. Again, this is one stock. Any correction is a buying opportunity. Whether it will correct, that's a different question. From where it will correct, that again is a very tough question. Also, what we are seeing for the last 4 or 5 trading sessions, the volumes have been significantly higher. It's exceptionally high when it broke out of this resistance, which was around 400 levels. And over the last, I would say, since 5th of July, when the stock had a low of 424, currently it's around 612. So that's almost not a 50%, but roughly around 45% rally in stock in the last 4 or 5 trading sessions it has made. So that tells me that those who are long, they should definitely hold on to their horses, hold on to this stock. And those who have missed the bus, I think they'll have to wait for a correction. Ideally, now the support for the stock would be around effectively around 500 levels. On the upside, if the stock continues with this momentum, then it's headed for 650, 700 levels.
Sakshi.
Okay, so that's the entire railway pack, and we'll continue to keep an eye out on how this space also continues to perform up until the budget. That is the key trigger right there. But pharma space, the way it has come back, Amar, any particular favorites of yours that have emerged in the recent run-up? Today it was Mankind Pharma that was rallying sharply. Divi's came back after a long haul. Zydus came back after a long haul. Glenmark has been performing off late. Sun Pharma, Lupin, Torrent Pharma, the entire space seems to be abuzz with action. Where do you see charts are strongest?
Yeah, I would say, which I talked about, Lupin is one stock which continues to remain very strong on the charts. It is trying to take out a key zone of resistance. So 1900, 1910, 20, currently it's around 1820. So roughly around 4 or 5% from the current levels is where it would meet with resistance. So this is one stock one can keep a close watch on. And the other stock is Markson Pharma. So what we are seeing here is that the stock had rallied significantly on 5th of July on significant volumes. And for the last few trading sessions, there is some consolidation which is happening. So the highs of today, that is 195, 200, that is the level to watch out for on the upside. If that level is taken out, then the stock could witness anywhere between 10 to 20% rally on the upside. So this is one stock to keep a close watch on.
Any 2 stocks for BTST, STBT trades?
I would say REC is one stock one can keep a close watch on. REC is one stock, and the other stock which I had talked about is, I would say, ICICI Prudential. ICICI Prudential is one stock one can keep a close watch on, but it needs to sustain above today's high for any further upside to materials.
We somehow come back to the same
REC.
favorites, over and over again. But this is life as far as markets are concerned. Stocks which are from a particular sector, they rise to a point and then they sort of wait and then sort of consolidate, and then again a new sector comes up, it rises, then consolidates, then the previous ones who were favorites start moving up. I have absolutely no doubt in my mind, Sakshi, in 1 or 2 days the PSU defense plays will be back in action, just as they were 1 week ago. Then the rail battle started. Now rail will get into consolidation, and then PSUs will come back into fashion. 3:27, ladies and gentlemen, let's sort of start wrapping up the market. So a first serious bout of profit taking in the market. 24,141 was the low, and we are trying to shut shop around 24,320. So you can well imagine there is a 190 point uptick
Already
from day's low.
Yeah.
And this is what is pointing to this 40,000 crore inflow. जो भी intraday dip मिल रहा है, people are buying like mad and taking this buy the dip kind of a philosophy to newer and better heights. We were on T-1 for Nifty today. It was the expiry of the Bank Nifty, 52,213, 355 points lower. IT has sold off ahead of the earnings, 1% lower, 390 down on the index itself, 37,276 as far as the index is concerned. and you see a mild bit of red on Infosys 0.7% lower, TCS 1.8% lower, Emphasis persistent BFL down 2.5%. In fact, of the 19 FNO stocks that we track on IT, only one is up, and that's L&T Mindtree. So that's how the broader markets have shaped up. And at the same point of time, money that has been booked away as profit from many of such sectors has moved into the pharma space as also the FMCG space. It shows the defensive nature of markets today, Sakshi.
Absolutely. Well, we'll thank you, Amar, on that note, for being with us on this special edition and sharing all your thoughts and ideas. We'll continue to track those names going forward too. 115 points lower in trade, 24,315. But the good part is we are back above 24,300 again in trade today. The Nifty Bank also, if you see, is definitely off the low point of the day, but still it's about weaker than the benchmark indices. 0.65% lower in trade, 52,225. Among the sectors, pharma, FMCG, infra, that largely remained the play today, largely pharma and FMCG. Beyond that, all the sectors have managed to slip into the red today. They're weak. 2% down for autos, metals, media, PSU banks, IT, broader markets, small cap and mid cap both lower, and of course the banking space also weak in trade. But the sectoral rotation took place, and today it was the turn of paint stocks, of insurance stocks, FMCG stocks to drive the market sentiment. So Asian Paints, SBI Life, Divi's, Britannia, Power Grid, NTPC, Grasim, HDFC Life were top movers on the Nifty. On the lower side, M&M. Following those price cuts, despite the clarification coming in, there was no respite, 6.7% lower. Hindalco, Tata Steel, TCS, HCL Tech and Hero Moto, State Bank of India were the top drags. FNO movers, India Cements jumped up 4% higher in trade. Mahanagar Gas, Asian Paints, REC again, and we also have JK Cement that buzzed in trade. 0.5% gains came in also for the PSU pack, and of course it was REC, PSC and the power space names that really performed in trade today. With that, viewers, the screen is frozen about 120 points lower in trade. We'll wrap it up at that and hope that the markets find some more strength in tomorrow's trading session right ahead of the big bank earnings, which we will start to cover for you on Business Today Television. Many thanks for tuning in, and thanks from both Shell and me for now. Hello and welcome. You're watching Business Today Television and I'm Sakshi Batra. This is a special edition. You know that we've been running a series on NDA-nomics Budget 2024-2025. This is a show which is specially designed to help all our viewers really understand how to really assess what could be,